Hey guys, welcome back. Here we are with one of the most important heads of income called income from salaries, and this is a different format, different style that we are going through. This is not my study material, this is not my PPT, this is not my PDF. This is the study material of Institute of Chartered Accountants of India, and trust me on this, this is the standard material. That is why we are following this, because once you study this through this material, you need not to go through any of the authors. There are different authors providing different things, but at the end, tax is tax and tax is law. So at the end, that is going to remain the same, and there is nothing better than this PDF I can ever tell you. Even if I'm giving you something better than this, if I'm saying this, there is something, but there is nothing, trust me on this. Okay, so let's start with something. This is the basic pro forma for computation of income under the head salaries. So something we write like this is how salary structure looks like. So there is something called as basic salary first. Basic salary is nothing but the salary component, the basic component of the salary that you get as form of your income. That is of course going to be part of your income. Then different allowances, commission, bonus, fees, whatever we get, we add all those things together. Then there are certain allowances in which we get certain exemptions. Now what is an exemption? Exemption is something where a certain amount of money is not taxed as an income. Now what are those exemptions? There are three types of exemptions basically. There is something called as fully exempt, there is something called as fully not at all exempt, I mean fully taxable, fully exempt, and then there is something called as fully taxable. So these are two different extreme ends, we can say, but where we are somewhere in between, where there are certain things which are partly taxable and or we can say partly exempt as well, and those are the what we can say allowances which we need to study. So one of such allowance is income from house rent allowance. Under the income from salaries, one allowance called house rent allowance. So there is this allowance. Let me tell you what does it mean. House rent allowance is an allowance that you get for as a rent that you are paying to stay so as to work, right? So depending upon where you are staying, this is going to be your exemption. There are three amounts. Least of these three is going to be exempt as house rent allowance. What are these amounts? First one is called HRA actually received. That is called as house rent allowance actually received. Now where are we getting this exemption from? Section 10 subsection 13a. Section 10 is called as exemption section for the Income Tax Act 1961. So first one is HRA actually received. Second one, rent paid less 10% of salary for the relevant period. Rent paid minus 10% of the salary. Okay, and third amount is 50% of salary or 40% of salary, depending upon where you are staying. If you are staying in either of these cities, Mumbai, Kolkata, Delhi or Chennai, then it is going to be 50% of your salary which is allowed as exemption from HRA. Otherwise it is going to be 40%, depending upon where you are staying. Now these are the three amounts that you have calculated. One is called actually received, the other one is called the rent paid minus 10% of the salary, third one is going to be 50% of your salary or 40% of your salary, depending upon where you are staying. Least of these three amount is going to be exempt as HRA exemption. Remaining amount is going to be taxed. So first we write down how much HRA you have actually received, then we calculate the HRA exemption based on these 1, 2, 3 amounts. Whichever is exempt, we write it over here, and after subtracting, we go to the final amount in the outer column. That is your exemption amount, right? Next, it is one more allowance. There is something called as we'll get into the details of HRA once we actually study. This is like an overview, but there are certain allowances which are very simple. That is why we are going into allowances also as we are going through. So children education allowance. Children education allowance is very simple. Rupees 100 per month per child, maximum of 2 children. How much? 100 into 2 child, right, into 12 months. This is the maximum amount that is exempt. So depending upon how much you are getting, how many children you have, that is secondary, but the maximum amount that is exempt is 100 rupees per child, maximum of 2 child, and per month means at the end 1200 into 2, which becomes 2400 maximum for a year. Children education allowance, just the same formula, but instead of 100 it is going to be 300. So 300 per month per child up to maximum of 2 children. Simple. Transport allowance. Transport allowance is rupees 3200 per month in case of blind, deaf and dumb orthopedically handicapped employees only. So these are the three people: a blind, deaf, dumb, and somebody who is having some kind of orthopedical issue is going to be getting this exemption of transport allowance of 3,200 per month in case of this. So again, 3,200 into 12. How much does it become? Write it down in the comment box. Okay, 3,200 into 12 because 12 months. Then entertainment allowance, no exemption. Other allowances include overtime allowances, city compensatory allowance. All these allowances, whatever you're getting, is going to be taxed. Then there is something called as perquisite. What is a perquisite? Perquisite is something that you're receiving as a benefit. Okay. Now, valuation of rent-free accommodation. One such perquisite is if you are receiving something called as accommodation without rent payment. So where the accommodation is provided by the government to its employees, in that case there is something called as license fee. So whatever license fee government has determined, that is going to be your taxable value of taxable perquisites. Here what we are actually finding out, until now we had allowances. So in allowances you get some amount of money, so we were finding out how much is taxable and how much is exempt. But in case of perquisites, what happens is you're getting something as non-monetary. So there is no money involved over here. There is a benefit. So what is the value of that benefit? That is going to be taxed. So what is the value of that perquisite is what we are trying to calculate. So license fee is going to be your taxable, and if in case there is any amount as rent paid to the employer, that you can reduce it. For example, value of my perquisite happens to be 10,000, but 5,000 I'm paying as rent to my employer. So actual benefit that I'm receiving is only 10,000 minus 5,000, that becomes 5,000, right? So that is the. But where accommodation is provided by any other employee than the government employee, so in that case, depending upon where you are staying, okay, depending upon where you are staying, it will determine the value of rent-free accommodation. So there are three categories. First, if the population of city is more than 25 lakhs, if the population of city is between 10 lakhs and 25 lakhs, and if the population is less than 10 lakhs. In other case, that means in either of these other than these two cases. So if it is more than 25 lakhs, then it is going to be 15% of your salary. If it is the population of the city is between 10 lakhs and 25 lakhs, then it is going to be 10% of the salary. And if in case the population is less than 10 lakhs, then it is going to be 7.5% of the salary. Simple enough. And if there is any other amount being involved as what you are paying, then leave that amount, right? So that depending upon these three things, this is what you are receiving, either 7.5%, or what we can say, there is something called as 10%, or if it is going to be 15% of your salary. Simple enough. These are the three amounts depending upon where, and if in case you are paying something, then that is going to be separately deducted. Then if accommodation is taken on lease rent by the employer, if it is taken, if it is not owned by the employer, if it is taken on the lease, then either the lower of these amounts. So what are these amounts? Lease rental paid or 15%. This lease rental should not go beyond 15%, because the maximum amount that we are charging as tax is 15% depending upon the population, and this population is taken from the census of 2001, less any amount as paid rent to the employer. Simple enough. Obligation of employee discharged by employer. If anything which is supposed to be paid by employee but it is paid by the employer, that is also taken as a benefit received from employer only, and that will be taxed as a perquisite. Any sum payable by the employer to effect on assurance on the life of the employee to effect a contract for annuity, actual expenditure incurred by in case of any insurance or any benefit paid. Amount or aggregate of amounts of any contribution made in a recognized provident fund in NPS referred to section 80C CD1 approved superannuation fund, that is also going to be by the employer to the account of SSC to the extent it exceeds rupees 7,50,000. If there is something beyond this amount, that is also going to be taxed, right? But there is nothing to worry about this, because 7,50,000 is the maximum limit. Annual accreditation by way of interest, dividend, or any other amount of similar nature during the previous year to the balance at the credit of the recognized provident fund or NPS or approved superannuation fund to the extent it relates to the employer's contribution which is included in total income in any previous year under section 17 subsection 2 clause 7. That is also something related to it. Nothing much to worry about. Value of use of motor car. Now how do we calculate? We have a separate table attached to it, so we'll look into it once we go to the table. Any other perquisite. What can be any other perquisite? Provision of services of sweeper, gardener, watchman, or personal attendees whatever you are spending, gas, electricity, water supply, employer, whatever is the value, like we calculate actual expenditure, or will calculate like how much is the amount that is going to be spent if it is not owned. So depending upon that, provision of free concessional educational facilities for member of employees household, that is also going to be taxed. Where educational institutions maintained and owned by employer, then it is going to be maximum of 1000 per month, which should not be, like depending upon how it is, but maximum limit is 1000. Interest free or concessional loan exceeding rupees 20,000, if there is something, that will be also taxed. And interest computed at the rate of SBI as on first day of relevant previous year, whatever is going to be the rate of interest, that will be taken as the rate of interest for valuation in respect of loan for similar purposes for the maximum outstanding monthly balance minus interest actually paid by the employee. Value of gift voucher, sum equal to the amount of such gifts. If value of gift voucher is below rupees 5,000, there would be no perquisite. So if it goes beyond 5,000, that will be tax. Use of movable assets, that is also separately. Transfer of movable assets, actual cost of asset to the employer less cost of normal wear and tear minus amount paid, or so whatever, if you are if some asset you are getting from the company, that will be also considered as a perquisite. Leave travel concession, there is a separate table attached to it for leave travel concession. Then gratuity, there is a separate calculation, that is also we are going to study in detail. Then pension, again something is there, commuted pension, leave encashment, then voluntary retirement. Then yeah, voluntary retirement is very simple, that is also something I thought we will study in detail, but here it is given in this table itself. So let's have, there are 4 amounts to voluntary not leave encashment, actually voluntary retirement compensation under section 1010C. So what are these amounts? First, compensation actually received, right, whatever you are receiving, that will be the actual amount. Then 5 lakhs is maximum limit. Then third amount is 3 months salary into completed years of service. So if I have completed 10 years, so 3 months salary, my latest salary is for example 50,000, so 50,000 into 3 months, which becomes 1,50,000, and I have served 10 years, so 1,50,000 into 10, it should not be that amount, which will be 15 lakhs, but the maximum limit is 5 lakhs. And one more amount is last drawn salary into remaining months of service left. So based on these 4 calculations, the amount that you will get least is going to be exempt as your voluntary retirement service. Okay. Retrenchment compensation, again it is very simple. Retrenchment compensation, the exempt amount is under section 1010B, which is compensation actually received, then maximum limit is 5 lakhs and 15 days average pay into completed years of service and part thereof in excess of 6 months. So if it is 5 years and 7 months, then it will be considered as 5 years, and 7 months will be rounded off to 1 year, which becomes 6 years. If it is less than 6 months, for example it is 5 years 4 months, then it will be only 5 months, not 5 years, not 6 years. So these are the 3 amounts that will be there. Whatever you add together, there is something called as gross salary in total of all these amounts. Then there are certain deductions under section 16. There are 3 deductions basically. What are those 3 deductions? First one, it is amount of salary or rupees 50,000, whichever is less. This is the standard deduction. 50,000 you will get as a deduction under section 16(1)(a). Okay, everybody is going to get it if your gross salary is not less than 50,000, right? And if it is less than 50,000, then no matter, you're not going to file your income tax, right? So whoever is filing their income tax return, definitely they are going to get this deduction as 50,000 being the standard deduction. Then entertainment allowance under section 16 subsection 2 only for government employee. This is something you need to understand. This standard deduction is allowed only for government employee. That too, a maximum of rupees 5,000. There are 3 amounts basically. Lower of these is going to be exempt. Maximum is 5,000, 1/5 of basic salary, and actual entertainment allowance. For example, my actual entertainment allowance received is only 2,000. Then only 2,000 is going to be exempt, not 5,000. So actual and 1/5 of the basic and 5,000, whichever is less, is going to be exempt. And last but not the least deduction is professional tax or PT on employment paid by employee under section 16 subsection 3. So whatever amount you are paying as professional tax is also allowed as standard deduction. Simple enough? Yes. Now let's come back to something called as value of motor car. How are you going to determine the value of motor car if in case you are going through as a perquisite? If you are getting as a perquisite of motor car, then what is going to be the value of motor car. Now there are certain criteria. There are three things you have to understand. One, who is the owner of the car and who is spending on that car, and for what purpose this car is being used. Okay, so if it is being used fully for office purpose, then there is no value or there is no benefit as to the employee, because that car, that motor car, that vehicle is being used only for official purposes. Yes or no? If it is used only for personal, then entire amount is going to be taxed. But if it is partly official, partly personal, at that time we are going for these amounts, right? So if car owned or hired by, now depending upon whoever is owning, or if you are not owning, if you are hiring it and paying the rent, then again in the same case, if it is owned by employer and expenses are met by employer itself, and if it is used for total official purpose, no perquisite, because it is used for official purpose. But if it is partly used, then there is calculation being involved. Now what is this calculation, that we will look into. If it is owned by employee, expenses by employer and used for office purpose, no expenditure. If it is owned by employee and if it is owned by employer and expenses by employee, then in case of official value, there is some calculation involved, because owner is the employer but expenses are made by employee, so definitely employee is going to claim those expenses if he is spending for the office purpose. But when it is for partly office, partly personal, then at that time we'll look into what is the size of the car. If the capacity of the engine of the car is less than 1.6 liters, less than or equal to 1.6 liters, then in that case the valuation is very simple. What we are looking into, 1,200 per month. If it is more than 1.6 liters, then it becomes 2,400 per month. Very simple. If in other case also, if in case expenses are met by employee, then the owner is employer but expenses are made by employee. If the owner is employer and expenses are also made by employer, then 1,800 per month and 2,400 per month. If expenses are made by employee but the car is owned by employer, in that case it becomes 600 and 900 instead of this 1,800 and 2,400. How much it becomes? 600 and 900 instead of these two amounts of 1,800 and 2,400. And if in case driver is provided, then add 900 per month for driver also. In either case, it doesn't matter who is owning the car and who is spending. If there is a driver, then 900 per month is for the driver. But if the car is owned by employer and expenses are made by employer, then 1,800 per month. If the car is less than 1.6 liters, if it is more than 1.6 liters, then 2,400 per month. And if the owner is employer and expenses are made by employee, then up to 1.6 liters it is 600. Beyond 1.6 liters it is 900 per month. Simple enough. Now next it is, this is how we are actually going to calculate income from salary. Comes from these three sections. One is section 15, 16 and 17. 15 talks about what is salary, how it is going to be charged. Basically 15 talks about chargeability, and 17 talks about meaning of salary, and 16 talks about deductions. What are those deductions? We just looked into. Section 16 has 3 deductions. Simple. Now let's get into first thing for under section 17. Basically first thing that you need to have is employer-employee relationship. If there is any employer-employee relationship, whatever amount you're receiving, part of that relationship from your employer is going to be taxed as your salary income. It doesn't matter whether it is full-time or part-time employment. So there is something called as foregoing of salary. If you're not taking your salary, that is also chargeable to tax, because that is part of your salary you yourself are foregoing. Then there's something called as surrender of salary. What do we mean by surrender of salary? If an employer surrenders his salary to the central government under section 2 of the voluntary surrender of salaries, so surrendered would be exempt while computing his taxable income. Then salary paid tax free, that is also there is, in other words, means that the employer bears the burden of the tax on the salary of, in such case the income from salaries in the heads of employment will consist of his salary income and also the tax on his salary, because this is going to be a perquisite then, right? Place of there is something called as place of accrual of salary. Under section 9 subsection 1 clause 2, salary earned in India is deemed to accrue or rise in India even if it is paid outside India, or it is paid or payable after the contract of employment in India comes to end. If an employee paid pension, this is about this is like, it does not matter about the place. This is about chargeability of income tax. So that is also something that makes it very clear. Simple enough. Now moving on, basis of charge, how it is going to be charged. Section 15 deals with the basis of charge. Salary is chargeable to tax either on due basis or on receipt basis, whichever is earlier. It does not matter whether you have received or not. If it has even accrued, that is also going to be charged as salary income, right? Now moving on to it, basis of charge is also done. Advance salary. What is advance salary? If you're receiving your salary in advance, that is also going to be taxed as your salary, because you have received it even if it is not accrued. Arrears of salary, there is something that salary is due but you haven't received and it hasn't been charged earlier. Now you are receiving salary for the past, that is going to be your arrears of salary. That is also going to be taxed. Now let's come to salary, perquisites and profits in lieu of salary. What does salary means? Whatever amount you receive. Perquisites means the benefit you receive, and profit in lieu of salary, that you're not getting salary but you are getting something as part of the profit. So all those things are part of your what we call it as income from salary. Simple enough. Now as we discussed, there are three categories of allowances. One is called as fully taxable and one is called as fully exempt. Here everything is taxable, there is no exemption to these allowances. Like entertainment allowance, if you're receiving as a government employee, there is a deduction but there is no exemption. There is a difference between exemptions and deductions. What is that difference? Write it down in the comment box. Now dearness allowance, overtime allowance, like these allowances do not form any do not include any part of exemption. These are fully taxable, and then there are certain allowances which are fully exempt, but in between there are certain things which are partly exempt and partly taxable. What are those things that we have to look into? One such thing is HRA, house rent allowances, then certain special allowances. All those things we are going to look into look in the detail one by one. Now what are those allowances which are fully taxable? One is city compensatory allowance. If anything you're getting as entertainment allowance, transport allowance, we already, like, there is nothing to explain much into it. And yeah, there is an exemption if it is provided to certain people. What are those people? We have already dealt with. Now house rent allowance. What is house rent allowance? House rent allowance, depending upon where you are staying, there are three amounts. One is how much amount you have actually received. The other one is rent paid minus 10% of salary, and third amount is 50% of salary in case of metro cities like Delhi, Kolkata, Mumbai and Chennai. Otherwise it is going to be 40% of your salary. Whatever you get, least of these three amount is exempt as house rent allowance. There are certain notes to be dealt with. One is exemption is not available to an assessee who lives in his own house. If you are just paying the rent, then only you will get. If you are staying in your own house, then there is no burden as such of house rent. So the trick to it is, even if you are staying in your own house, depending upon who is the owner, if your parents are the owner, have a rent agreement with them. That is how simple it is. Salary, for now here we have salary. Okay, there are twice we are using the word salary. One is salary, rent paid minus 10% of salary, and 50% of the salary. In either cases, what does it mean? Salary means basic salary, dearness allowance if provided in terms of employment, and commission as a fixed percentage of turnover. These three amounts. What are those three amounts? Basic, okay, plus DA if it is forming part of retirement, okay, and plus commission fixed in terms of percentage of turnover. If it is not fixed, then it will not be included. These are the three amounts that you have to add together as salary, and these calculation of 10% and 50% or 40% will be on this amount. Relevant period means the period in which the said accommodation has occupied by the assessee during the previous year. Now this is a question, very standard question. We are not getting into the details of the question because this is very simple. I'll provide this document in the comment section or description box below, so just have a look into it. And this question you can definitely go through. It is very simple. If there was something tricky to it, I would have explained, but this is very simple, so that is why we are not getting into the details. Something you have to study on your own. or we'll have a separate video on questions itself, right? Now, special allowances to meet expenses related to duties or personal expenses. What are those allowances? One, under section 10 subsection 14 clause 1, special allowances or benefit not having the nature of perquisite specially granted to meet expenses incurred wholly necessary. Okay, there are something which are related to employment. Now what are those these things? Rule 2 to be the allowances having been prescribed under rule. So certain allowances which are exempt. What are those? Any allowance granted to meet the cost of travel on tour or the transfer, that is called traveling allowance, that will be exempt. Any allowances whether granted on tour or on the period of journey, okay, that same allowance it is. Daily allowance, like to meet your daily expenditure, that is also exempt. Conveyance allowance granted to meet the expenditure incurred, conveyance the performance of duties of an office or employment of profit, that is conveyance allowance. Then something called as helper allowance, if some helper is provided. If some research allowance is there, that is also exempt. So these are certain things which are exempt, because these things you are doing for office. Uniform allowance, if you have to incur some expenditure on your uniform, for example police department, so for them there is this allowance which is again exempt. Allowance prescribed for the purpose of section 10 subsection 14 2. So to which extent these allowances are provided? So special compensatory for hilly areas, if some special compensatory allowances is given, so 800 or 300 per month depending upon the specified locations, or rupees 7,000 per month in certain areas of J and K, that is exempt. Okay, these are extent to which the allowance is exempt. Okay, so for hilly areas 800, 300 and 7,000, these are the three amounts. Any compensatory allowance in nature of border area allowance or remote facility or difficult area allowance, it is going to be 1300, 1100, 1050, 750, 300, 200 per month depending upon the location. Special compensatory tribal area allowance 200 per month. Simple. Any allowance granted to working in any transport system, so it is going to 70% of such allowance up to a maximum of 10%, 10,000 per month. Okay, it is not going to be. Children education allowance, we have already dealt with 100 per month, maximum of 2 children. Hostel expenditure 300 per month, maximum of 2 children. Compensatory field area allowance 2,600 per month. Compensatory modified field area 1,000 per month. Any compensatory counter insurgency allowance 3,900 per month. These are certain allowances given to what we can say defense people, right? Certain people working in the army and defense sector. Transport allowance 3,200 per month, but to whom? These are the what we can say criteria: blind, deaf and dumb, or what we can say orthopedically handicapped, right? Underground allowance, if you are working under the ground, 800 per month, that is exemption. Any special allowance in a high altitude area, then 1,600 or 1,060 per month. Simple enough. Next, any special compensatory highly active field area allowance, again 4,200 per month. Island duty allowance 3,250 allowance, armed forces in Andaman and Nicobar and Lakshadweep group of islands. So these are again to the members of armed forces. Simple enough. Yeah. Now let's move on to something. These are certain questions. Again, this is very simple question, there is nothing tricky to it, and this is also something you can understand. If you are not able to understand, I'll give you a simple trick. Either you can put it in the comment box, definitely I'll make a video on this if there are people who are not able to understand. Otherwise, go through this document and I'm pretty much sure you will understand. But if you don't want me to make a video and still you want to understand, the same very simple question is, go to ChatGPT, type this question as it is, you will get a solution to it. That is again a simple trick. Okay, now allowances which are fully exempt. What are those allowances? This is a very important question. Allowances to Supreme Court or High Court judges, allowances received from United Nations organizations, compensatory allowance under Article 222 of the Constitution. Then there is something called as sanctuary allowance, that is also exempt. Allowance payable outside India, that is also exempt. Then annuity or pension, what does it mean? What is annuity or pension? Pension is something which you get after the retirement. So Pension, how do we deal with pension? There are two types of pensions. One is called as commuted pension and the other one is called as uncommuted pension. So uncommuted pension refers to the pension received periodically. If you are receiving something periodically, that is going to be fully taxable. But commuted means you commute the entire amount and you receive pension as lump sum. For example, whatever amount has been accumulated in my pension fund, at the time of retirement I claim all my amount. For example, it comes out to be 30 lakhs, 40 lakhs. So entire amount I am taking out, that is going to be commuted pension, and that is partly taxable and partly exempt. But if I am saying that no, I need 50,000 per month, that is going to be fully taxable. But if I am taking commuted pension, then this lump sum amount, this is going to be partly taxable and partly exempt. So what is going to be the exemption amount? So again, employees of the this is under section 1010A. okay, employees of the central government, local authorities, statutory corporation, members of civil services, defense services, any pension received by them is fully exempt from tax. So if anything is received by the government employees, now which government, central, local, state, any government, okay, basically that is going to be exempt. But what about other employees? Other employees have to pay tax on certain portion of pension, but not on the entire amount basically. Okay, so what is going to be that certain amount of taxability? In that case also there are two categories. One is if the employee has received gratuity or not. If he has received the gratuity, then 1/3 of the commuted pension. If no gratuity, then 1/2. Now which is going to be greater? 1/3 is going to be lesser amount and 1/2 is going to be a bigger amount. So if the employee has not received any gratuity, so more exemption is given. If has received the gratuity, then less exemption is given. How do we calculate? This is the formula. What is the formula? 1/3 into commuted pension received divided by what is the percentage of commutation into 100. If I have commuted my entire amount, then it is going to be 100 upon 100. This 100 would be cancelled, so 1/3 of the actual amount received. But if I have commuted only 50%, then this would be 50%. okay, same formula here, but instead of 1/3 it is going to be 1/2. okay, simple enough, I believe. Now let's take just a pause in between. Okay, just had a tea break. Now coming back to the same scenario. This is the table. Now what does this table means? There are certain things. Pension, depending upon commuted or uncommuted. If it is uncommuted, then fully taxable. Commuted, then there are certain criteria. If it is government employee, then fully exempt. If, for other people, there are two criteria. Gratuity has received or gratuity has not received. If gratuity has received, then 1/3. If gratuity has not received, then 1/2. Simple enough. That is the chart we just studied. There is again a question on what we can say, pension. Now there are certain there is certain example. Mr. Sagar, who retired on 110, is receiving like 1st October is receiving 5,000 per month as pension. On 1st February 2023, 23 only, yeah, he commuted 60% of his pension and received rupees 3 lakhs as commuted pension. You are required to compute his taxable income in all the three. If he is government employee, if he is a private sector employee, received gratuity of 5 lakhs. If he is private sector employee and did not receive any gratuity, in all the cases there is a solution. So simple enough. Uncommuted pension he will receive for, like, he retired on 1st October. There are certain things. Okay, if they are asking for taxable salary, then you have to include salary also from 1st April to 1st October, but they are just asking the pension component. So pension, there are two parts. One is commuted and there is other one is uncommuted. So he retired on 1st October, but he commuted on 1st February. So from 1st October to 1st February, October, November, December, Jan, and 1st February he commuted. So October, November, December and January, for 4 months he will receive 5,000 per month, which is going to be fully taxable. But for the balance amount we need to find out. So that is what it is given as. If he is a government employee, for first 4 months it is going to be 24,000 and 6,000 into 4, and for the balance period he is going to receive like 60% he has commuted, the balance 40% is uncommuted, so that is going to be taxable. 5,000 into 4 into 40%. Simple enough. Sorry, on what date did he commute? Was it first? Yeah, there is some miscalculation I believe over here. 1st October. So how many months are there? October, November, December, Jan, and on 1st February he is commuting. So there is some miscalculation. There are 4 months only, not how many months they have taken. They have taken 6 months over here. not 6 months, 5,000 into October to March they have considered. So they are considering, yeah, some wrong amount is there. It should not be 24,000, it should be only 4 months, October to January, not March. Okay, so sorry, yeah, October to March, actually they are considering the entire period. So 5,000 into 4 months into 2, so that part they are commuted. Then commuted pension fee, he has received 3 lakhs, so everything, let's say this commuted is going to be fully exempt, right? So only 40% they are actually including. I mean 5,000 into 4 and 40% of 5,000 into 4, balance 2 months. So it is just like the entire amount they are taking. I was talking about this amount separately and this amount separately, but in the same equation they have put everything. That is why the total is 24,000. Now for others this amount is going to be the same, but this exemption would be different. Now in case of gratuity received, then it is going to be 1/3 into the amount actually received and divided by 60%, which is commuted, and this is the exemption. And if not received, then it is going to be 5,000, sorry, 1/2 into 3 lakhs, so 50%. So this 2,50,000, simple enough, of 60%. That is your, what we can call it as pension, pension income. The next is gratuity. Now what is gratuity? Gratuity is something where what we do is, if you have worked hard for a company and at the time of the retirement you're going, company sometimes gives gratuity. There is something called as Payment of Gratuity Act. In the short form we call it as POGA. So if a hard-working employee leaves an organization, it becomes a moral obligation for the company to give some amount as a reward of the hard work of that particular employee. So for that purpose, there is this act which makes it mandatory for the companies to pay their employee as gratuity if they have worked for 5 years or more. Simple enough. That is why most of the employees retiring after 5 years or 6 years, they get this amount as gratuity. So how do we tax it? So there is something explanation in respect of gratuity under section 10 subsection 10. What does it mean? Retirement gratuity received, just a second, okay, I'll just clarify, I'll just make it clear for you to see. So now what are we looking? Retirement gratuity received under the pension code or registry regulations applicable to members of the defense service is fully exempt from tax. Employees for central government, members of civil services under section 10(10)(1) come retirement or gratuity is fully exempt again. But for other employees, what is the provision? There are 3 amounts. One is rupees 20 lakhs gratuity actually received and 15 days salary based on. Now this 15 days salary will depend upon whether you are covered by Payment of Gratuity Act or not. If you are covered by Payment of Gratuity Act, in that case this 15 days salary becomes 15/26, because there are 26 working days in a month. So 15 days salary means 15/26 and last drawn salary for such completed years. For example, my last drawn salary was 60k, so 60k into how many years I have worked, for example 10, so into 10. That is how this formula comes into the picture, right? But what if I'm not covered by the Payment of Gratuity Act? In that case, this formula becomes, these 2 amounts are the same, 20 lakhs and gratuity actually received, but instead of 15 days salary, see here the wordings were 15 days salary. So this is the interpretation to 15 days salary. What is the interpretation? This formula of is the interpretation of 15 days salary. But here it says half month salary. So half month salary simply becomes 1/2 of 60k into how many years I have served, for example 10, so 10. So whatever being this will change some amount, and here it was last drawn salary as 60k, simple. Here they were saying 15 days salary based on last drawn salary. Here they are saying 15 days, not 15 days, here they are saying half month salary based on last 10 months average salary. So if in case 5 months back my salary was 50,000, so this average of 50/60 would be somewhere 55, 54, whatever it would be less than the latest salary. So that will make this amount lesser than if in case it is covered. This is number of years, how many years you have served, right? That is your income from gratuity or taxability of gratuity. This is the table for gratuity. Again, let's get into the details of this table. received during the service, then fully taxable. Again, this part we did miss, but this is about at the time of retirement or death. In this case, we are looking into the taxability. If it is by the government employee, fully exempt under section 10(10)(1). Other than government employees, then in that case it is depending upon whether covered by POGA or not covered by POGA. If covered by POGA, then it is going to be 15 days salary. If not covered, then it is going to be half month salary, and balance two amounts are there, that is actually received and maximum limit of 20 lakhs in either case, right? See, number of days taken in a month would be 60, 26. Here it would be 30, simple enough. 15 by 26 and 15 by 30. There is a question to gratuity. Again, this question talks about Mr. Ravi retired on 15 June 2022 after completion of 26 years and 8 months. So this we will round it off to 27 years because it is 8 months is more than 6 months. Received gratuity of rupees 15 lakhs. At the time of retirement, his salary was basic salary 50,000 per month, dearness allowance 10,000 per month, 60% of which is for retirement benefits, commission 1% of turnover on the last 10 months, which turnover happens to be 1 crore 20 lakhs, and bonus 25,000 per annum, depending upon if he is a private sector employee covered under POGA, not covered under POGA, or government employee. If it is government employee, the entire amount is exempt, but otherwise there are two amounts. One is going to be 20 lakhs. 20 lakhs is common, and the other amount that actually received is 15 lakhs. Third amount we need to calculate in either case. So in the first case it is going to be 15 by 26, right? 15 by 26 into last drawn salary. Last drawn salary was 50,000 per month. Now let's just look into whether do we include what do we call it as plus years of salary. Now this, again, this part we have to understand. 10,000, why are we adding to it? Because this is dearness allowance per month. So 50,000 plus 10 months salary means, again here we add basic plus DA. So 15 by 26 into 50,000 plus 10,000, which becomes 60,000 into 27. But in other case it is going to be 1 by 2 into 10 months average. Even if we try to find out, that average is also going to be the same because there is no change in the salary or no information given, so that is also going to be the same amount. But there would be a difference, that 1 by 2 into, again, 60 into 27. So whatever the amount comes into, that will be exempt from income. So gratuity actually received 15 days salary, 15 by 26 into 50 plus 10 into 27, and in this case it is going to be 1 by 2, and average salary. So this average of all the salary amount we are adding over here rather than going for this straight amount. This is, again, there is a difference over here, that in case of salary we are adding everything and finding out an average, but in the earlier case we were just adding as such to the amount being as basic plus DA only. So here it is 50,000 basic salary, 10,000 into 60% forming part, and 1% of the overall bonus, which is going to be but monthly bonus it is going to be, so 1% into 10 by 12. So for 10 months we are trying to find out, and everything added together divided by 10, that will give us the average salary for 10 months. Simple enough. Into 26, here we are not even rounding it off to 27. Why are we not? Just let me just check and let's clarify whether it can be rounded off or not. Where was that provision? Fraction to be ignored. So again, if it is not covered by POGA, then fraction is also not to be included. If it is covered by POGA, then if it is 12 years and 6 months, then it will become 13 years. But if it is not covered by POGA, even if it is 12 years and 11 months, it will just remain 12 years. So fraction we have to ignore. That is the difference. Not covered by POGA, so everything add together and find an average. But if it is covered by POGA, then just basic and DA, and that is going to be your latest salary. Okay, these are the details of gratuity. Now, fees, commissions, perquisites, or profits in lieu of or in addition to any salary or wages. So that is the payment in form of fees or commission by the employer to the employee are fully taxable. Commission may be paid as fixed percentage or turnover or net profits, etc. Section 17(2), Section 17 subsection 3 contains the provisions relating to perquisites. Any advance of salary, that is also already discussed, that is also going to be taxed. Leave salary or leave encashment, what do we do with that? Leave encashment also we have seen before, but let's have a look. Exemption of amount received, that is going to how it is going to be taxed in section 10(10)(AA). Basically for government employee it is fully exempt. But what about others? In case of others, non-government employees, again there are 4 amounts, not 3 amounts this time. First, it is maximum limit of 3 lakhs. Then leave salary or leave salary actually received. Third is 10 months salary on the basis of average salary of last 10 months and cash equivalent of leave left actually. So based on last 10 months average salary immediately preceding the date of retirement to the credit of the employer at the time of retirement or death. Earned leave encashment cannot exceed 30 days per year. That is also you have to consider. So how many days are left, that can be added. So whichever comes the least is going to be exempt basically. Now leave salary received during the period is fully taxable period of service. Okay, where leave salary is received from 2 or more employees in the same previous year with the aggregate amount of leave salary exempt from tax cannot exceed rupees 3 lakhs, because that is the maximum. If I am receiving from 2 employees and I am claiming 3 lakhs from both, that is not possible. Where leave salary is received in any earlier previous year from a former employer and again received from another employer in a later previous year, the limit of rupees 3 lakh will be reduced in the amount of leave salary. So 3 lakhs is maximum for your lifetime. If you are receiving twice and claimed already, then 3 lakhs would be reduced by that amount. Salary for this purpose means basic salary and dearness allowance if forming part in terms of employment, and commission which is expressed as fixed percentage of turnover. So again the same calculation as to HRA. Average salary will be determined on the basis of salary drawn during the period of 10 months immediately preceding the date of his or her retirement. Simple enough. The same formula for like the same thing expressed in the form of table. For government received during the period of service, fully taxable. Received at the time of retirement, government employees fully exempt. For others, there are 4 amounts. One is 3 lakhs, one is actually received, 10 months salary based on last 10 months, based on the average of last 10 months, and this is going to be like find out the average and multiply by 10. And what is salary? Salary means basic plus DA forming part plus fixed percentage of commission, and cash equivalence of left amount of service. On that also we have a question to solve. For leave encashment, same formula is there. Provident fund is something becomes very important for us to understand, because provident fund is going to be there in each and every case of employee. And how do we tax it? So there are certain amounts to it. One is called as employer's contribution, one is called as employee's contribution, and then there are interest on both the things, on employer's contribution as well, on employee's contribution as well. But the taxability is different in each case depending upon whether it is a recognized provident fund, whether it is unrecognized, statutory or public provident fund. So if it is a recognized provident fund means a provident fund recognized by the Commissioner of Income Tax, or it is recognized in Part A, Schedule 6 to the Income Tax Act. Unrecognized provident fund means it is not recognized. Statutory provident fund is governed by Provident Funds Act 1925. Public provident fund means a fund under the Public Provident Fund Act 1968. So these are the definitions. Now depending upon in which criteria you are falling into, the taxability is going to be different. Okay, so employer's contribution, if it is recognized provident fund, then a contribution in excess of 12% of salary is taxable. So if it is up to 12%, well and fine, but beyond 12% it is going to be taxable. In case of unrecognized, not taxable at the time of contribution. If it is statutory, then fully exempt. We don't look into what is the percentage, what is the scenario. And in case of public provident fund, there is no employer's contribution itself. Employee's contribution eligible for deduction under section 80C if it is recognized, not eligible if it is unrecognized, then no deduction is allowed. and in case of statutory also, and in case of public provident fund also, you are getting this exemption under not exemption, this deduction under section 80C or chapter 6. Okay, interest credited on employer's contribution. So in case of employer's contribution, the interest that you are receiving in excess of 9.5%, it will be taxed as salary if it is recognized. If it is unrecognized, not taxed at the time of credit of interest, and in case of statutory, everything is fully exempt, and this is though not available itself in case of public provident fund. Interest credited on employees contribution. In case of statutory, it is again taxed like not statutory. In case of recognized provident fund, in excess of 9.5%, it is taxed as salary. Not taxable at the time of credit of interest. Exempt up to certain limit of contribution. There is this thing note below it, so we will look into it if in case of statutory provident fund, and in case of public provident fund it is fully exempt. Amount withdrawn on retirement or termination, fully exempt. Employees contribution is not taxable. Interest on employees contribution is taxed under income from other sources. On what we are just saying, yeah, income from other sources. Employers contribution and interest thereon is taxed as profit in lieu of salary in case of unrecognized provident fund, and in case of statute it is fully exempt, and in case of what we can say public provident fund it is fully exempt. Okay, in case of recognized, subject to certain conditions detailed in the chart below. Where is that chart? Let's look into the chart. Okay, so there are two charts. One it is, just a second, yeah, non-taxable contribution amounting aggregate of, so closing balance at the time. So there are certain exemptions basically. Again, this is not something that we should be going in the details, but still we'll look into the chart. So exemption of accumulated balance on recognized provident fund payable. So if it is more than 5 years, then exempt. If less than 5 years, then are the services terminated due to what reasons? So if ill health or what we can say contraction or discontinuation of employer's business, or in either case beyond the control of the employee. If yes, that case also if it is exempt. Otherwise, is the retirement balance standing on the credit of program with this employer? If yes, exempt. If no, then taxable. And if there is an entire amount standing to the credit of balance, then not transferred in the NPS account referred to ATCCT and notified by the central government, then it is exempt. No, then taxable. Simple enough. If it is feeling complicated, you can ignore this part, because there is nothing such an importance as to public provident fund, except for those people who are actually going to write professional exams like CA, Inter and all. Otherwise, for other BCom, BBA and MBA graduates, this is something just you need not to get into the details. Then there are certain questions on provident fund and the stuff. Okay, now profit in lieu of salary. What is the situation? Compensation on account of retirement of his employment. The amount of any compensation due to or received by an SSE, just a second, received by an SSE from his employer or former employer at or connection with the termination of his employment. Again, anything you receive at the time, payment from provident fund if it is going beyond certain limit, that is also profit in lieu of salary. Compensation on account of notification of the terms and conditions of employment, that is also payment from provident fund, and this part we have already dealt with. Then what it is, payment key man insurance policy. So if company is paying as insurance, key man insurance, taking key man insurance policy, that is also profit in lieu of salary. Lump sum payment or otherwise any amount before payment, like something called as joining bonus or something, that is also called as profit in lieu of salary. Now moving on, we have something called as retrenchment compensation. What is retrenchment compensation? That retrenchment compensation means if I'm throwing you out of my company, and because of that throwing out, if I'm giving you certain amount of money, that is called as retrenchment compensation. So that is also taxed. How do we tax it? There are certain amounts to it. One is, the first amount is 5 lakh rupees. It should not go beyond 5 lakh rupees. Amount calculated in accordance with the provisions of section 25F of the Industrial Disputes Act 1947. Now what is this amount? This amount is nothing but 15 days average pay into completed years of service and part thereof in excess of 6 months. So if I have worked for 5 years, then 15 days salary for 5 years. So it is like the average pay. Simple enough. Or the maximum limit is 5 lakhs. It should not go beyond 5 lakh. That is called as retrenchment compensation. So I will always give 15 days salary, 15 days pay for how many years I have, like you have served for my company, that I will give you as retrenchment compensation. That is how simple it is. Moving on, this is very simple to calculate. This is very simple to understand. There's nothing complicated to it. Next is voluntary retirement receipt. So first one was if I am throwing you out of my company. Second is voluntary. If you are voluntarily going out of my company, in that case what has happened, these are certain examples, public sector company and other things. How do we tax? Yeah, it applies to an employee who has completed 10 years of service or completed 40 years of age. So if I'm just joining and taking going out of the organization, that will not be considered as VRS, voluntary retirement scheme, or it should be more than 40 years of service. So these are certain terms and conditions to it. Amount, how do we tax? It is the amount, it should not exceed, okay, amount equivalent to 3 months salary for each completed years. So in the first case it was 15 days, here it is 3 months salary at the time of retirement multiplied by the balance months of service left before the date of retirement or superannuation. If I am retiring today and there are 10 years left to my service, that we will include 10 years into 12 months. We'll calculate the balance amount of months, or the first one is how many years or how many months I have how many years I have served multiplied by 3 months for each completed year. Okay, so if I have served 12 years, so 12 into 3 months. Simple enough. Moving on. Next, there are certain terms and conditions. Salary for this purpose means basic salary, DNS allowance, and forming part of employment, forming part of salary, and commission, which is expressed as fixed percentage of turnover. So the same expression of salary as to HRA. Then there is this question. Now let's come down to perquisites. What are the perquisites? Perquisites means something that may be provided. The term perquisite indicates some extra benefit in addition to the amount that may be legally due by the way of contract for services rendered. So other than what I was supposed to give, I'm giving certain extra perquisites that will be taxed as some benefit that you're receiving as part of employment contract only, because whatever an employee receives from employer is called as salary, whether it is monetary or not. So rent-free accommodation we have already seen. Now let's just make a note of things that we have already dealt with. Rent-free accommodation we are not going again, because this part we have already dealt with. Concession in rent payment by the first perquisite in case of all employees. So there is a criteria as to how many employees it is there, and certain things are there for certain notified employees only are available. Security or sweat equity shares, this is again a benefit. Then amount payable by an employer directly or indirectly to effect assurance of the life of the assessee. This part also we have dealt with. Now there is something called as equity shares. So if I'm giving equity shares, so how do we value this perquisite? So the value of any specified security or sweat equity shares allotted for transfer directly or indirectly by the employer or former free of cost or at concessional rate to the assessee. So it will be calculated based on what is the market value. Amount or the aggregate of amounts of any contribution made to the access recognized or like beyond 12%, that calculation we have already dealt with. So that will also be calculated as a perquisite. Simple enough. This part also we have dealt with. Any other fringe benefit or amenity, any benefit like interest free loan, club facility, credit card facility, gift voucher, use of movable asset, transfer of movable asset, any benefit that an employee is receiving from employer is calculated as perquisite. Annual exceptions to the balance of the grade of the recognized provident fund approved and beyond exceeding rupees 7,50,000. Okay, any amount that you're contributing to employee from the employer. Now there are certain changes. Taxable perquisites under section 17(2) for the current and previous year, certain things CBDT has entered. So amount or aggregate of amounts of employer contribution in excess of rupees 7.5 lakhs under section 80 CCT. Amount or aggregate or amount of employers contribution in excess of rupees 700 recognized provident fund from commencing on or after 1st April 2020. Aggregate of taxable perquisites, again same thing. Moving on, this table is not indicating something major to it. Then there is a question to it, have a look into it. We'll solve all these questions if in case you want. So let us know down in the comment section below that you want this question to be discussed. Like solution is already there in this thing, but we'll solve by our own understanding and we'll have a discussion on that. Okay, tax free perquisites, so telephone facility, transport facility, privilege passes and privilege tickets. So these are again certain perquisites, but these are exempt in case of all the employees. Employees contribution to staff group insurance scheme, then annual premium by employer on personal accident policy, refreshment, subsidized lunch or recreational facilities, amount spent on training of employees, sum payable by employer to RPF, leave travel concession, and then if there is some medical facility, rent free for official residence. Okay, if you are going on an official tour and you are getting rent free accommodation, that cannot be charged. Conveyance facilities, so these are certain benefits that are exempt. Okay, in case of either on leave or after retirement or after termination of his service. So in respect of leave, the clause exempts the leave travel concession received by employees from their employers for proceeding to any place in India, either on leave or after retirement from service or after termination of this service. And this thing is available to individuals only. To the companies it cannot be applied, because salary itself is applicable to individuals only. Limit of exemptions, certain exemptions have certain limits. Okay, monetary limits. So for air travel and for if it is by air travel, then amount not exceeding the air economy fare of the national what you call it as carrier by the shortest route. If it is by other mode, when it comes to rail, so amount not exceeding the air condition first class ticket by the shortest route. When rail service is not applicable, then first class deluxe bus fare rate. If it is no recognized public transport is there, then amount equivalent to the air condition. If there is nothing recognized, then air condition is the maximum that we can give as leave travel concession. Simple enough. There is a question to it. Now there are going to be full length questions on salary part, so let's just look into it. A value of medical treatment in any hospital maintained by the employer. Now these are certain what we can say miscellaneous allowances. These are going to be dealt in there is nothing much so as to discuss in this part, and these are simple also. If you just have a look into it, you'll understand. But if in case there is something that you want to understand on this part, we'll make separate video on that. Simple enough. Whatever you want, let us know in the comment section. Otherwise we have completed this entire PDF that is there. So payment of premium on personal accident insurance policy purposes taxable in the hands of specified employees. Again, this is something in detail it will be asked if in case you are studying for CA Inter, otherwise not. So if you're studying for CA Inter, have a look into it. If something you're not able to understand, let us know in the comment section. Definitely I'll make a video on that. Simple enough. Moving on, valuation of perquisites. How do we value? So valuation of residential accommodation, this is how we value this. There is a format given to it. Now we have dealt with all these things. How do we value for rent free accommodation? There is something called as 15% of salary, 10% or 7.5% of the salary based on which location it is. So that part is definitely there. If accommodation on, this is also we have something that we have already dealt with in detail. Question attached to it. Perquisites value of unfurnished accommodation. Now if there is furniture added to it, so 10% cost of the furniture is also going to be added. 10% of the original cost of the furniture, not on the depreciated value. Motor car also we have dealt with, depending upon 1.6, whether it is more than 1.6 liters or less than 1.6 liters, what use it is going to be 1800 or 2400 or 600 or 900, depending upon who is owning the car and who is spending on that part also we have dealt in the very beginning itself. Gas, electricity, whatever amount you are spending, or if it is owned by the employer itself, then the cost of that particular service that employer is putting onto it, or the amount employer is charging from others. Simple enough. These are certain miscellaneous provisions, perquisites that we have. Club expenditure, there's nothing much as to study on these things, or to there is something to study onto it, but there's nothing much to explain on these things. So have a look into these perquisites. And now I'm just scrolling down to what is left as such to discuss. Otherwise we are done with this video. Meanwhile, you give us a thumbs up to this video if you're so far you have stayed with us. And yeah, thank you so much for watching. Let us know in the comment section if you want us to make any particular video on any particular topic. Ask us down, is there any question from this particular video, or if your question is big enough and there is a particular topic that can be covered on your question, definitely we'll make a video on that. Thank you so much for watching. And yeah, deductions from salaries also we have dealt with: standard deduction, entertainment allowance, and professional tax allowance. With this we are getting done. Now full length questions are there. We'll have a separate video on what we can say full length questions on income tax. 2-3 examples we will solve. And yeah, there is something called as a relief under section 89, so on account of arrears of salary or advance salary, where by reason of any portion of any SEC salary being paid in arrears or in advance, or by reason of his having received in any one financial year salary or more than the 12 months or payment of profit in lieu of salary under section, his income is assessed at a higher rate than at which it would otherwise be, has been assessed. The assessing official or an applicant made to him on his behalf grant such relief as prescribed. The procedure for computing relief is under in rule 21A. So this is for if something is calculated for more than 12 months, so you can ask for the relief under this particular format that is given in rule 21A. So on account of family pension, no relief at the time of voluntary retirement. That is there. We are getting down. We are stopping over here. These are the rates of taxes. We have made a separate video on rates of taxes, so that you can watch. Definitely we'll link it down in the comment box or in the I button, depending upon where you are seeing. Yes, salary form from UNO is completely exempt, and this is what we can say summary of this entire chapter or entire document that we have just seen through. Okay, thank you so much for watching. We'll just stop over here, and yeah, do subscribe to our channel. For the first time I'm asking you to subscribe in last 2-3 months since I have been making this video from since January 22, I can say. Yeah, thank you so much. Bye bye.